A private equity oftentimes has a very negative image, sometimes associated with corporate raiders. So they buy companies, they fire people, they cut cost, they sell valuable assets to even the ones that really underpin the company's competitiveness in exchange for just upfront cash payout. And I have to say, some of these points, as I mentioned, are actually real. But then the question is, then why is this industry still growing if it's such a bad, evil people? And why are these private equity investors keep getting money? And who are the people who are giving money to these guys? The answer is institutional investors. And we're talking about pension funds, sovereign wealth funds, or university endowments, or insurance companies who have a very large pool of capital with a very long run investment horizon. And if you think about why they give money to these private equity investors, is basically because of higher return. So there are a lot of data points that point to the fact that private equity funds yield better return compared to public equity or bonds in the long run if they hold it for multiple years. But there's obviously a trade-off. So for these private equity funds, your capital is locked in for multiple years, 5 years, 10 years. And oftentimes you're not able to get your cash back during those periods. So as opposed to that, for public equity or public bonds, if you don't like your position, what you can do is tomorrow you go to the public market and you just sell your position. But for private equity funds, it's not possible. So in some sense, you're basically getting compensated for being locked up in your capital for many years with a higher return compared to your public equity or bond investment. And also on top of that, what it also provides is a sort of a diversification for these institutional investors. Still, these institutional investors, most of their investments are in public equity or bonds, but they want to invest in some other higher return, high risk asset classes like public equity for the purpose of not putting all eggs in one basket. So in the end, I think private equity isn't about good or bad by nature. It's more of a financial instrument for these investors. And it really fits well if a institution or if a party who's giving money to these guys have a long-term horizon for their investments, because they have patience and they don't need to cash out in the near term.